Listen to me closely because the numbers I am about to give you should haunt you until you fix this. A casino operates with an edge that is almost laughably small. In the game of roulette, the house only has a 2.7% mathematical advantage over the player. That is it. Just 2.7%. Yet, look at the Las Vegas skyline. Look at the billions of dollars in lights, fountains, and massive hotels. That entire empire was built on a tiny single-digit edge. Now, look at your trading strategy. I guarantee that if you have done even a basic level of backtesting, your strategy probably has a better statistical edge than a casino. You might have a 5% edge, maybe even a 10% edge. So, I have to ask you the uncomfortable question. Why are they making billions while you are struggling to keep your account balance from hitting zero? Why is the casino profitable every single year while you are stressed out, anxious, and losing money? The hard truth is that your strategy is not the problem. You can spend the next 5 years buying new indicators, joining new Discord groups, and hunting for the Holy Grail, but it will not matter. Your backtests look great. Your setup is solid. You know what a head and shoulders looks like, and you understand support and resistance. Intellectually, you have the tools to win. But practically, you are bleeding chips. Why? Because every single time you sit down in your chair and turn on your monitors, you are introducing the most dangerous, volatile, and destructive variable into your trading system. That variable is you. It is your biology. It is your emotions. It is that primitive part of your brain that screams at you to do the wrong thing at exactly the wrong time. Your emotions are an evolutionary survival mechanism, but in the markets, they are a suicide vest. They will do everything they can to sabotage your trading by forcing you to rationalize stupid decisions. They will whisper in your ear that you should chase that green candle because it's going to the moon. They will paralyze you with fear so you skip a perfect setup. They will make you move your stop loss because you just can't take the pain of being wrong again. They will make you size up to make back the losses from the morning, and they will force you to trade out of sheer boredom because watching a chart do nothing feels like a waste of time. So, how do you stop yourself from sabotaging yourself? How do you take the human error out of an activity that is pure math and probability? The answer is simple, but doing it requires a level of discipline most people refuse to cultivate. You must adopt a rules-based mechanical system. This is the only way to fight back against your own biology. When I say a rules-based mechanical system, I am not talking about a vague set of guidelines. I am talking about a rigid, ironclad framework that runs your trading like a computer program. It is exactly what it sounds like. It is a completely defined set of laws that tells you when to enter, exactly where to place your stop, exactly where to take profit, and exactly how to manage the trade while it is live. In a true mechanical system, there is no interpretation. There is no such thing as discretion. There is no gut feeling, no intuition, and no reading the tape. Every single decision is predetermined before you even look at a chart. If condition A, condition B, and condition C are met, you take the trade. If one of them is missing, you do not touch the mouse. Your stop loss goes exactly where the rules say it goes. Your target goes exactly where the math dictates. Period. End of story. I know what you are thinking. You are thinking that this sounds robotic. You are thinking that this removes the art from trading. And you know what? You are absolutely right. We are killing the art because the art of trading is just a fancy word for your emotions sneaking into your process to steal your money. We don't want to be artists. We want to be the casino. Let's be clear about why mechanical systems work. I'm not standing here telling you that a mechanical system wins every trade. I'm not telling you that you will have a 100% win rate because that system does not exist on this planet. What I am saying is that mechanical systems remove the single biggest cause of failure, which is your decision-making in the heat of the moment. The power of a mechanical system lies in one word: consistency. With a mechanical system, every trade is treated the same way. There are no special circumstances. There is no, this time is different. There is no, I have a good feeling about this one. You execute the same way every single time. This consistency is the magic ingredient that allows your edge to play out over time. Think about the casino again. They don't win every hand of blackjack. They don't win every spin of the roulette wheel. In fact, they lose thousands of times a day. But they don't get emotional about it. The pit boss doesn't come down and scream at the dealer for losing a hand. They don't change the rules of blackjack just because they lost 3 hands in a row. They know that over 10,000 hands, the math will suffocate the players and transfer the wealth to the house. They let probability work in their favor. Your mechanical system does the exact same thing for you. It forces you to stop acting like the gambler and start acting like the house. This leads to emotional detachment. When you are following mechanical rules, you are not making decisions under fire. You aren't deciding what to do while your heart is pounding and your P&L is flashing red. The decision was made weeks ago when you were calm, rational, and objective, back when you were developing and testing your system. Now, in the live market, you are just an executor. You are just a button clicker. This removes the emotional charge from the outcome. If you are in a losing trade, it doesn't matter. Your system says the stop is here, so that is where it is. You don't have to wrestle with the decision. You don't have to bargain with God. You don't have to feel the fear and fight through it. The decision is already made. You are free. Furthermore, a mechanical system gives you the gift of accountability and improvement. Without rules, you can't measure anything. If you are trading based on gut feel and you lose money, you don't know if your strategy sucks or if you just had a bad day emotionally. But with a mechanical system, you can actually measure your performance accurately. You know whether you are losing because your system has no edge or because you are not following your system. You can look at your trading journal and say, I followed my rules on these 15 trades and I still lost money. That is valuable data. It means the system needs adjustment. But if you look at your journal and see that you broke your rules, that is a discipline issue. Without mechanical rules, you cannot do this analysis. Every trade is different. Every decision was based on a vibe. You have no idea what is working and what isn't, so you are doomed to repeat the same mistakes forever. Let's talk about mental energy. Trading is mentally exhausting when every decision is discretionary. Should I take this trade? It looks a little overextended. Maybe I should wait for a pullback. Should I move my stop? I don't want to get stopped out by a wick. Should I take profit here? It looks like resistance. Every one of those questions burns mental energy. It creates decision fatigue. By the end of the session, your willpower is depleted, and that is when you make the catastrophic mistake that blows your account. With a mechanical system, 90% of those decisions are eliminated. Your brain isn't constantly wrestling with choices. You show up, you check if your conditions are met, you execute if they are, and that is it. This preservation of mental energy is huge for maintaining discipline throughout a session, a week, or a year. So, what does a real mechanical system look like? Let's break down the essential components because you need to know exactly what to build. First, you need entry rules. These need to be completely objective. You cannot have a rule that says, enter when momentum looks strong. That is subjective. What looks strong to you might look overbought to me. Instead, your rule must be specific. Enter when the 20-period EMA crosses above the 50-period EMA, the RSI is above 50, and price makes a higher high above the previous day's high. That is objective. Anyone looking at the chart sees the same signal. There is no argument. Next, stop-loss placement. No discretion here. Your system defines exactly where the stop goes before you enter. Maybe it is below the most recent swing low. Maybe it is a multiple of the average true range. Maybe it is a fixed dollar amount or a percentage of your account. Whatever it is defined. You never enter a trade without knowing exactly where you will get out if you are wrong. Then comes position sizing. How much are you risking per trade? This is not a feeling. This is math. Most professional traders risk between 0.5% and 2% of their account per trade. Your mechanical system defines this precisely. You don't size up because you feel confident, and you don't size down because you are scared. The math decides the size. You also need profit targets. Where do you take profit? Is it a fixed risk to reward ratio? Is it a multiple of your stop distance? Is it a technical level? Whatever it is predetermined. No watching the trade and feeling out when to exit. No getting greedy and holding for a home run that turns into a loss. You exit when the system tells you to exit. Then there are trade management rules. Does your system use a trailing stop? Do you scale out at different levels? Do you move to break even at a certain point? All of this is defined in advance. You also need to define trade frequency. Is this a day trading system that might trigger 5 times a session, or is it a swing system that generates 1 trade a week? Understanding this helps you avoid forcing trades out of boredom. And finally, filters and conditions. Does your system only trade during certain market hours? Do you only trade in the direction of the higher time frame trend? Do you avoid trading during major news events like non-farm payrolls? These filters safeguard your capital. Now, here is the step that separates the dreamers from the professionals. The testing phase. You can have the best rules in the world, but if you haven't tested them, you are just gambling. Before you risk a single dollar on a mechanical system, you need to know if it has an edge. This means backtesting. You have to go back through historical data, months or years of it, and apply your rules. And I mean apply them brutally. No cherry picking. No looking at a chart and saying, oh, well, I would have skipped that loser because it looked weird. No, you follow the rules. If the rules say buy, you record a buy. If If it's a loss, you record a loss. You need to know your numbers. What is your win rate? What is your average winner versus your average loser? What is your maximum drawdown? How many consecutive losses did the system experience in the worst-case scenario? These metrics tell you if your system has a genuine edge or if you are about to donate your savings to the market. Most traders skip this. They are lazy. They come up with some rules that make sense, and they start trading real money. Then they are shocked when they lose. The market does not care what makes sense to you. It only cares what works. A properly tested mechanical system removes the guesswork. When you are in a drawdown, you don't panic because you have seen this drawdown in your data. You know your system survives it. You know that if you just keep executing, the equity curve will turn back up. This knowledge builds the confidence you need to follow the system when it is psychologically painful. And believe me, it will be painful. This is the psychological battle nobody warns you about. Creating a mechanical system is actually the easy part. Following it is brutally difficult. Why? Because even with rules, your emotions don't disappear. You are still a human being. You still feel the fear when a trade goes against you. You still feel the greed when you see a massive move you missed. You still experience the urge to override the system and take control. The difference is that now you are aware of it. Now you have something concrete to hold on to when those emotions surge. You have an anchor in the storm. Let me give you a personal example to drive this home. Early in my trading career, I developed a mechanical system for swing trading breakouts. I tested it thoroughly. I went through over 200 trades in my backtest. It had a win rate of about 55%, but the average winner was 2 times the size of the average loser. It had a solid positive expectancy. I was excited. I started trading it live with real money. The first 3 trades were losers. Bam, bam, bam. Straight to the stop loss. Now, I knew from my testing that losing streaks of 5 or 6 trades were normal for this system. I knew this intellectually. The data was right there on my spreadsheet. But emotionally, I was a wreck. I was convinced the system didn't work. I was convinced I had made a mistake. Every fiber of my being wanted to start adjusting the rules, tweaking the entry, moving the stop. But I didn't. I forced myself to sit on my hands. I stuck with it. Trade 4 was a winner. It made back the loss of the first 2 trades. Trade 5 was a winner that ran for 3 times my risk. By trade 20, I was profitable. By trade 50, the results were tracking almost exactly to my backtest. The system worked. But it only worked because I forced myself to follow it through the emotional discomfort. If I had tweaked the rules after the 3rd loss, I would have missed the winners, and I would have broken the statistical edge. Even when traders commit to a mechanical system, they fall into predictable traps. You need to watch out for the exception trap. This is the voice that says, the system says to take this trade, but the market looks incredibly overextended, so just this once I'll skip it. Or the reverse, the system says to skip this trade, but it looks so perfect, so just this once I'll take it. Listen to me, every exception you make destroys the integrity of your system. You are not trading your tested system anymore. You are trading your emotions with a thin veneer of system trading. And the worst part is that sometimes the exception works out. You skip a trade and it would have lost. You take a random trade and it wins. This reinforces the bad behavior. But over time, exceptions kill your edge. You cannot beat the math by ignoring the math. Then there is the system hopping trap. Your system hits a drawdown. It takes 3 or 4 losses in a row. Instead of recognizing this as normal variance, you abandon the ship. You go searching for a new strategy on YouTube. You find another system, you start trading it, and it immediately takes losses because you are jumping in at the worst possible time. So you abandon that one too. You become a nomad, perpetually searching for the perfect system that never experiences drawdowns. I have news for you, that system does not exist. Every strategy has periods of underperformance. The only way to make money is to stick with a proven edge through the bad times so you are there for the good times. There is a beautiful paradox that happens when you fully commit to a mechanical system. We call it the paradox of constraints. The constraints actually give you freedom. I know that sounds crazy. How can having strict, rigid rules give you freedom? But think about the alternative. When you are trading discretionarily based on emotion and gut feel, you are a slave to your impulses. You are constantly second-guessing yourself. You are constantly stressed. Every decision is a burden. Every trade is emotionally draining. When you have a mechanical system, you are free from that burden. The decision is made. You don't have to figure out what to do. You just execute. There is a lightness to it, a simplicity. You stop watching every tick with anxiety because you know your stop is in place and you trust your system. You stop agonizing over whether to take a trade because your rules tell you objectively yes or no. You stop losing sleep over whether you made the right call because the only right call is following your process. The constraints of the system create freedom from emotional turmoil. Trading becomes boring. And let me tell you, boring is perfect. When you are consistently following a mechanical system, trading should be the most boring part of your day. You are not on an emotional roller coaster. You are not having these massive adrenaline-fueled sessions. You show up, you punch the clock, you execute, and you go on with your life. For people addicted to the excitement of trading, this sounds terrible. They want the rush. But if you are addicted to the excitement, you are gambling, not trading. Professional trading is a business. It is supposed to be boring. You execute your process, manage your risk, and let probability work over time. The traders who are constantly excited, constantly stimulated, constantly on an emotional high or low, those are the traders who blow up their accounts. Sustainable profitability comes from the boring consistency of executing a proven system over and over and over again. This also allows you to reclaim your life. When you have a mechanical system, trading doesn't consume your entire existence. Discretionary traders are constantly glued to their screens. They are always watching, always analyzing, always worried they will miss a move. It is exhausting and it bleeds into every other area of life. It ruins relationships. It ruins your health. With a mechanical system, especially one designed for your lifestyle, you can actually have a life outside of trading. Maybe your system only requires you to check charts once a day at the daily close. Maybe it's a swing system where you set up trades on Sunday and let them run all week. Maybe it's a day trading system with a defined 2-hour session, and once that session is over, you are done. The system gives you boundaries. You know when you need to be engaged and when you can completely disconnect. So, how do you actually follow your mechanical system when every emotion is screaming at you to do something else? You have to train yourself like an athlete. Start small. When you first begin trading a mechanical system, trade the smallest size possible. I don't care if you have $1 million account, trade micro lots. Trade one share. The goal isn't to make money yet. The goal is to build the psychological habit of following the system. You are rewiring your brain. Once you can follow the rules consistently with small size without feeling the urge to intervene, then, and only then, can you gradually increase your risk. You must journal everything. Keep a detailed log of every trade. But don't just log the price. Log your behavior. Did you follow your rules completely? If not, what rule did you break and why? What emotion were you feeling? Was it fear? Was it greed? Was it boredom? Over time, you will see patterns in when and why you deviate from your system. This awareness is the first step to controlling it. You need to shift your focus from outcome to process. Judge yourself not on whether the trade won or lost, but on whether you executed the plan. A winning trade where you broke your rules is a failure. It is fool's gold. A losing trade where you perfectly executed your system is a success. It is the cost of doing business. This mindset shift is critical. Embrace probability. Your system is a numbers game. If your system has a 60% win rate, that means 40% of the time you are supposed to lose. 4 losses out of 10 is not failure. It is expected. It is baked into the cake. When you truly internalize this, individual losses stop feeling personal. You don't get angry at the market. You don't take it as an insult to your intelligence. It's just a data point. Automate what you can. Use pending orders instead of market orders. Set your stop loss and take profit immediately upon entry. Use alerts. The more you can automate, the less opportunity there is for your sticky fingers to mess things up. And take breaks after losses. If your system triggers a trade and it loses, walk away. Reset your brain. Do not revenge trade. Here is the long game. This is what separates the wealthy traders from the gamblers. Losing traders think in terms of right now. They need this trade to win. They need today to be green. They need this week to be profitable to pay rent. Winning traders think in terms of hundreds of trades. They know their system's edge plays out over a massive sample size. They know that this week might be red. This month might be red. But over 100 trades, over a year, the edge manifests and the money piles up. When you adopt a mechanical system, you are committing to that long-term view. You are saying, I trust that if I execute these rules consistently, probability will work in my favor. It requires patience. It requires discipline. It requires letting go of the need for immediate gratification. But that is the price of consistency. Let me bring this all together. Your emotions are not your friend in this business. Fear, greed, hope, revenge, euphoria. These are poisons. You cannot eliminate them because you are human, but you can build a cage for them. That cage is your mechanical system. It removes the emotional decision-making. It gives you objective criteria for every action. It allows your edge to play out. Yes, building it takes work. Testing it takes time. Following it takes grit. But compare that effort to the alternative. Do you want to continue letting your emotions sabotage your financial future? Do you want to continue that cycle of hope and devastation? Do you want to look back in 5 years and realize you are in the exact same spot? The mechanical path is harder in the short term because it requires you to change who you are. But it is infinitely easier in the long term because it works. If you are ready to make this change, here is your roadmap. Define your system. Write down every rule. Make them objective. Test them on historical data until your eyes bleed. Do not risk real money until you have proven the edge. Then start trading it with tiny size. Build the habit. Journal every execution. Give it time. Commit to at least 100 trades before you judge the performance. And be patient with yourself. You will stumble. You will break a rule. Forgive yourself. Get back on the horse and follow the plan on the next trade. In trading, you are not competing against the hedge funds. You are not competing against the algorithms. You are competing against yourself. You are fighting against your own biology, your own impulses, and your own need for dopamine. The market will always be there. It will always offer opportunities. The question is not what the market will do. The question is, will you be disciplined enough to take only the opportunities that fit your system? Will you be patient enough to wait? Will you be strong enough to do nothing when you want to do something? That is the real battle. And with a mechanical system, it is a battle you can finally win. Step away from the emotions, build the machine, trust the math, and become the casino.